Third-party express logistics service provider TCI Express reported a strong Q3 performance. The company reported a healthy top-line performance with a growth in revenue along with an expansion in their operating margins. Let's do a three-point analysis on what these numbers mean for the company and the investors. 1. What are the highlights of Q3 FY19 for TCIX? Revenues of the company for the quarter increased by 15% to 247 crore rupees on the back of an 11% growth in business volumes. Operational performance was also strong as EBITDA came in 29% higher than last year at 31 crores. The profit after tax stood at 18.7 crores, registering a 21.3% growth year on year. The capital expenditure for the 9 months at the end of December 2018 stood at 22 crores and the full year it has been revised to 40 to 45 crores. 2. What do these numbers tell us? The volume growth was broad-based and there was higher contribution from the pharma, e-commerce and engineering segments. However, the volume growth was softer in comparison to previous quarters because there was a drop in consumer demand post the festive season. The operating margins expanded further to 11.8%, which indicates that the company has the ability to pass on the fuel price hike amid the volatility in crude oil. Higher tax outgo adversely impacted the bottom line, which increased by 21% year on year. 3. What is the outlook on the company and what should the investor strategy be? The demand for express logistics is anticipated to grow much faster than the growth in economic activity of the country. And the management is also very confident in achieving the 15 to 16% volume growth for the next 2 to 3 years as they expect that sectoral reforms like GST and e-way bill would continue to formalize the sector. Also, there is a slowdown in the auto sector, but it may not have a lot of impact on the company as it derives revenue mainly from the transportation of spare parts, which is a high replacement market. We remain optimistic on the earnings growth of TCIX and anticipate the margin expansion to continue going ahead. From a valuation standpoint, the stock trades at 26 times FY20 price to earnings multiple, which appears to be priced to perfection. Investors with a medium to long term view should look to accumulate TCIX on dips given its earnings outlook and strong business fundamentals.